In terms of our property development business, SM Land as a group delivered a net income from real estate of 3.9 billion pesos, and that increased by 57% from revenues of 13.3 billion, and that increased by 54%. Their consolidated net income increased by 38% to 3.8 billion pesos, and they delivered a margin or a net margin of 27%. Their main contributor, obviously, is SM Development Corporation, which is the main residential arm of SM Land. And this company delivered a net income from real estate of 2.98 billion pesos, and this was up 91%. Very, very strong growth. And that came from revenues of 11.3 billion, and this was up 86%. As you know, they're coming from a low base, and they've been emerging for the last 5 years, and it's just been an amazing journey for SMDC in terms of being able to get market or grab market share at the same time delivering a new business model that has been accepted by the market in general. So this explains why SMDC has become a dominant player in the housing business in the Philippines. Their net margin is very healthy at 27% and EBITDA margin of 32%. Their assets grew by 53%, okay, to 52.8 billion pesos. And book value was up 23% to 3.95 billion pesos. Very healthy balance sheet. Their debt level is even lower than the parent company of only 9% compared to 91% equity. Okay. ROE is about 14%. Now, in terms of the units sold so far this year, they've sold about 7,900 units with a value of 17.6 billion pesos. And they have an existing land bank of 61 hectares. As far as the commercial property business is concerned, that's also been growing very, very well. Their net income growth was 58%. This is a non-listed portion of SM Land. No? And their net income reached 645 million pesos on revenues of 1.67 billion, and that grew by 23%. As you know, they've been launching buildings that are catering to business process outsourcing companies, and they're about to launch two e-com, which we already reported. Now, this is the rendering of 3 e-com, which they plan to break ground next year, possibly in the first quarter. Dave Rafael is here. He can answer questions with regard to this project. But they plan to put up a GFA of about 120,000 square meters. And this will be just behind 2 e-com. And it will have a net leasable area of 91,000. So you can see the designs are becoming more and more interesting for these e-com buildings. And then the arena is fast taking shape in Mall of Asia complex. And this will have a seating capacity of 16,000 people. I think the first show they will have is, I don't know, I think an NBA game. But, you know, they're going to make a big splash on opening of SM Arena. The gross floor area is 62,000 square meters, and it has an adjacent parking building with a GFA of 96,000 square meters, and I think SM Prime is moving their headquarters in that building also. Now, in terms of our leisure projects, you have the Pico del Oro Cove, which is actually already almost complete. Except for 2 or 3 more residential buildings. But it's taken shape very well. It's a beautiful complex. And it's already busy on weekends especially, with the hotel now up and running. You know. So we'll probably invite the media very soon, perhaps in the first quarter, for you to see. Right now the weather is still very volatile, so it's actually best to go there during the summer season. In terms of hotels, we've given rather lengthy presentation of what happened to the hotels in the last briefing, so I'll just breeze through some of the other details that are fairly new. We announced that we have already broken ground for Davao's Park Inn, and that will have 200 rooms, 204 rooms, and will open in 2013. Now, just to give you an idea of how Park Inn will be looking like, it will be a lot more colorful. It's going to be like a mid-scale hotel, but it will have a grill all-day dining restaurant with 134 seats indoors and 84 seats outdoors. It will have meeting rooms, and it's going to be a very practical hotel that will be sitting beside is this the Lanang area in Davao, the Lanang Mall in Davao. Okay. As far as banking is concerned, I think both BDO and China Bank have already come out with their reports, so I'll just give you a very brief summary of how they did. Net income was up 19% to 7.6 billion pesos, with net interest income growing by 1% only, with 25.7 billion pesos. So they did well in bringing up the margins through other income, which was up 16% to 15.3 billion pesos. Now, their deposits increased by 15%, but much more interesting is the gross customer loans growth of 24%, very strong, to 620.8 billion pesos. ROE is at 11.8%, NPL is down further to 3.9%, and a CAR that's looking very, very healthy at 15%. For China Bank, their earnings came down by 7.5% to 3.4 billion pesos on a net interest income growth of 1.2% to 6.4 billion pesos. So that's the recurring income is fairly steady. So what affected the net income is really more of the trading gains. In terms of deposits, that grew by 2.8% to 194.5. But as what BDO saw, their gross customer loans also increased very healthily by 20.8% to 127.9 billion pesos. ROE of 14% is quite high. NPL of 3.1, which is down significantly from 4.4 last year. And a CAR that's looking even better at 16.5%. Now, this is what you've probably been waiting for, what our capex is for next year, and it will be a total of 56.8 billion pesos from the group. This is roughly about 1.3 billion US dollars if you were to use 43 as your exchange rate. So retail will be spending 4.6 billion, the malls 20.9, the banks 3.4, and the property group 26.9, and the hotels and conventions 1 billion. Now, I'll end my presentation at this point, and I will pass on the mic to all the different business heads so that they can talk further about their capex for next year. Okay, so Mr. Shaw would rather that you ask the questions before we get the panelists to speak.
SMDC, what was your financing mix in the first 9 months of the year compared to last year?
I'm sorry?
Financing mix. How much was cash, in-house financing, banks? Was there any pag-ibig?
Largely, I think it's fair to say that our financing mix is largely also from internally generated funds. These are from pre-selling and collection of our. You're speaking of the financing.
Sorry, I meant financing for the home buyers.
For the home buyers, yeah. Largely these are bank financing. We try not to do in-house financing since that is not our core business anyway. So most of the financing of the buyers are done through banks or from their own funds. So largely we do not do in-house financing as best as we can.
Any pag-ibig exposure?
Pag-ibig is very negligible because pag-ibig you really have to have a building which is already completed. In the case of SMDC, most of our projects are pre-selling. So by and large, we do not qualify for that. No? So even then, I think the bank terms given to our buyers are quite attractive. So pag-ibig, even now, I think it's barely even 0.5% of our portfolio.
Okay, it's not that significant. So
It's
meaning
not significant at all. Pag-ibig, no.
Okay.
Maybe I can add on that. No, if you see the balance sheet of SMDC and look at where is the financing coming from, uh, SMDC has the lowest gearing ratio, the debt to equity ratio. It's less than 10 debt and 90% equity. Effectively, the financing is done by the equity, by the stockholder, stock rights, they have issued two stock rights. Then beyond that, it's the normal operation of pre-selling and then the take out by the commercial bank of the receivable from sales.
Okay, second question is, what specific projects drove the real estate sales in the third quarter? If I'm not mistaken, it's 4.4 billion pesos in the third quarter of this year. Can you just specify which
The top
projects?
5 performers for the third quarter, and consistently also the top 5 performers for the entire year, are our Jazz project in Makati, Grass, which is beside SM North, our new entry, which is M Place South Triangle in Quezon City. We also have Light Residences, which is along EDSA, somewhere near Pioneer. I think you're familiar with that. And last but not the least is Wind Residences in Tagaytay. Not necessarily in this order, but these are the top 5 performers.
Okay, thanks.
But Rose, you also launched new projects now in the third quarter.
Yes, for the fourth quarter, we launched Green Residences, and we hope to launch Green Residences is near LaSalle, obviously for the name. We hope to launch. Sorry for the blue crowd here. We hope to be able to launch Shell Residences, which is within the Mall of Asia complex by the end of the month, end of November. And prior to that, we also launched 2 projects during the third quarter also. These are Mesa 2 Residences. Mesa 2 is in Santa Mesa near SM Center Point, and the other project is M Place Ortigas, one of our M Place brands in Ortigas complex.
I think somebody from Bloomberg,
Norman.
Norman, yeah, you're asking me some kind of before the one. No? Now is your time to ask.
How much are you still spending this year to complete your capex for 2011?
In 2011, I think we say that our capex is about something like 40 plus billion. Third quarter ending September, we have already spent something like 32, 33 billion. So beyond that, we may not spend all the 43 billion, but it is within, or some projects were below the budget that we have.
The outlook for the rest of the year.
Well, maybe I will start with the consolidated, and then each sector can have their own view. No? But from the SMIC consolidated viewpoint, we see that we can perform and reach the budget that we have set. That is, the net income bottom line should hit around 14% better than last year, in spite of the fact of what is happening in Europe or in the US. No? We were able to maintain. As of September, we are already 14%, 13 point something 5. So we feel we can maintain that. Maybe I should turn around here and they can describe from each sector. No?